Today I will show you the secrets of the outside bar. What's an outside bar? What are the different types and the meaning of the outside bar? Also, I will show you the engulfing pattern and how to define high probability trades using the outside bar. I'll also share with you the inside, outside, inside pattern and the failure of the outside bar. Hi, my name is Khaled Maziad and I am the founder of Trading Roadmap. Welcome to the third module of our free trading course, the Trade Journey. And if that's your first time here and would like to learn more about how to develop your winning trading plan, become consistent, control your emotions, and totally change your life, please start now by subscribing and hit the bell notification so you will not miss anything. As you read this disclaimer, it's very important to go through what we have learned so far. So we started by module 1 was about the market structure and how to define and understand the market structure and the market stages. The second module we discussed the inside bar and the meaning of the inside bar and different types of the inside bar. And today we will discuss the outside bar. So we will go through the definition of the outside bar and the different types of the outside bar, the meaning behind the outside bar, and also I'll show you the engulfing pattern and the three pro tips of the outside bar, the inside, outside, inside pattern, and the failure of the outside bar. Then we're gonna have a recap. So last time I mentioned that the inside bar is the calm before the storm. So the outside bar is the storm itself. And I'll show you exactly what does that mean. So let's start with what's an outside bar. Oops, sorry, I didn't mean that. Yes, that's one. So that's the outside bar. So basically, the outside bar is any bar that took out the highs of the previous bar and the lows of the previous bar. And I'll show you exactly what does that mean. So if you look at this bar also, what's happened here, we took the highs and we took the lows. And once it takes out the high and low of the previous bar, this bar is officially an outside bar regardless of the close. Remember last time we said for the inside bar that we have to wait for the close. For the outside bar, we don't have to wait for the close to confirm it as an outside bar. Because once you take the highs and lows of the previous bar, it's officially an outside bar. And now I'll show you some variations of the outside bar. So if you look at that one, so the first bar here, you will notice that we have a gap here. We gapped below and then we closed above the high of the previous bar. For the second one, what's happened? We opened within the range of the previous bar and then we went all the way down and then we closed up. And then for the third one, actually for that one you don't understand exactly what's happened, you don't know the direction, and because that's one of the things you will never understand looking at one time frame. So because the information available for us at this stage that this bar just opened here and closed there and somehow it went up there and went down there, we don't know exactly how that does that happen without looking at different time frames. And the last thing that one of the variations also is just the opposite of this bar. So instead of having this pin bar for the upside, we have it to the downside. So what happened here, this bar opened here and then closed there, but during this went all the way up there and then come back and close down. So now what does the outside bar mean? And if you think about it, it means that both sides are aggressive. So the buyers were willing to buy above the previous bar's high and the sellers were aggressive to sell below the previous bar's low. And I just want to show you exactly what does that mean. So if you look at this chart, so what we have here, we have here an outside bar. And I just defined here the previous range. So the previous candle's range, I just put it here. So we're gonna go lower to a lower time frame and we'll show you exactly what's happened. So what's happened here, if you can see that it looks like that was Friday, sorry, that was Monday. So during the weekend we have a gap and then the market gapped up, we went range and then we tried to break to the upside and then so we broke to the upside, that's the previous day's range, and then we have this massive sell off, and then also we took the lows of the previous bar. So I would like you to think about the outside bar is like Sparta.
This is Sparta!
Exactly, because if you think about it, it's simply put, one side takes control temporarily before the other side comes back and takes over again. So we have one side took control and took over, and then the other side say no, 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 this is Sparta, and then they came back and takes over. And now we will discuss the engulfing pattern. And just to be honest with you, there are many definitions for the engulfing bar or the engulfing pattern that takes into consideration the colors of the previous bar, the colors of the current bar, and the trend direction. And to make it simple, I'll mention what I consider as an engulfing bar, and I'll explain why I consider this one. So what I consider as an engulfing bar is the bar gaps lower and closes above the previous bar's high. That's for the bullish engulfing. So what I mean here, that we have this previous bar, and then we gap down, and then we close above the high of the previous bar, and it should close. The other definition that most of the people use, that you're gonna open near to the previous bar's low, and then all you need is just, regardless of the close, they're gonna need to cover the body of the previous bar. Why I consider that one? Because to be honest, it's more powerful. Like if you are able to close above the previous bar's high, that's more powerful. And same exactly for the bearish engulfing pattern. So what you have here, the bar gaps higher and close below the previous bar's high. So what happened here, we opened up here, we gapped up, and then we took all the way down, and then we closed below the low of the previous bar. So it's more powerful. And I'll show you like in a live example, and that's the euro bridge pound, and you will notice here this bar, and that's a weekly chart, because like the forex market is open 24 hours for 5 days, so we don't see gaps in the middle of the week, so we only see gaps during the weekend. So what happened here, we gapped down, and then we closed above the high. And also for the SPY here, we gapped above the previous bar's high, and then we closed below the previous bar's low. Exactly the same one here, we gapped up, and then we closed down below the low. And as I mentioned, like we call it the outside bar, which means we can apply it to any time frame. So I'll show you now, like that's the daily, and those are all those one with the O letter are outside bars, because they took the previous bars highs and lows. And also for the weekly, same story, you have this bar took the highs and lows, you have also this bar took the highs and lows, same here. Also you can find it for the monthly chart, doesn't really matter, and even for the yearly chart you can find, yeah, like you're gonna find this bar took the highs and lows, and exactly for the same one here. So now we will discuss the pro tip that's gonna help you to define high probability trades. And pro tip number one is the outside bar can be a continuation pattern or a reversal pattern. And what I mean by that is most traders misidentify it as only a reversal pattern. So they say always an engulfing pattern, or the outside bar is only a reversal pattern, and it's not. And I'll share with you now this chart and what you will find here. So that's an outside bar, and here it's a reversal, because reversal of this short movement here, and then we got a reversal, and then we start to go up. Here we have an outside bar as a continuation. Same here, we have already the downtrend, and then we have the outside bar as a continuation, and same here, we have two outside bars, and then we have the continuation. And exactly here we have the outside bar, and then the failure and then the failure of the failure, and we will discuss this later. But I just want to show you it's not just only the reversal, it could be a continuation also. The second tip, and that's really very important, that by understanding the market structure and taking consideration other time frames, we can increase the probability of having a successful trade. You cannot just trade the outside bar or any pattern in isolation of the market context. Very important. And as you see here, like the outside bar in itself within range will not have the same effect as it is like a continuation pattern like this, because you need to understand. And again, like, and here with different time frame, and again as I mentioned, and I will mention again, it doesn't mean that you can't trade it. All you need to understand is that you need to be aware of the fact that we are in range and I'm gonna take this bar, so you need to use this information to manage your expectation. It's very important managing your expectation. Most of the failures and the people wipe their accounts and people have losing trades and hold losing trades, it's about the expectation, because you think you are doing something good and it's not. So without understanding this, anything will not make, nothing gonna make sense to you. You need to be aware of the market structure and the importance of the multiple time frame analysis. And the last thing is, not all outside bars are the same, and the relation between the outside bar and the previous bar is very important. And I'll show you here what I mean by that. Like, here you have an outside bar, and here's, we will discuss this pattern later, it's the outside of the outside. And then if you notice here what happened, that we opened near the high of the previous bar. However, if you look here, that's also an outside bar, but we took the highs and lows. But what happened here, we closed in the middle, so it's a doji. So it doesn't have the same power of this bar because it closed in the middle. So we try to have think like this, we try to have a volatility expansion, and then we came back to the range. That's what exactly does that mean. So it's not have the same power of like this one. We took the highs, we took the lows, we took the highs, and then we continued up. Same here, you look, that's very powerful because it's also pin bar, like that one also. So that one also, you have the outside bar, took the highs, took the lows, and then you continue. This one gonna be a doji, and same here, like look at this one, just to close above the highs, very powerful, and it's also an engulfing pattern. So as we mentioned, like, don't touch and don't trade anything without understanding the market context. It's very important. The market context, the relationship between the previous bars, where is your close. You need to understand everything before taking any trade. Now we will go to the inside outside inside pattern, and as you see here, it's simply like you have the previous bar as an inside, and then you have the outside bar, and then you have an inside bar. And I want you to think like in terms of volatility, it is just contraction, expansion, contraction. And what does that mean? After this sequence, we should expect the next move should be the real move, because we have volatility contraction, and then we have volatility expansion, and then we had another contraction. So we should think about, or to be more accurate, the next move have a probability to be an expansion, or in another words, it's the real Sparta. So if we didn't have the real Sparta or the real breakout of the outside bar, this one gonna be. And I'll show you this one. So we have this blue bar, it's an inside outside inside, and you'll notice this one. That's a little indicator I created. I'll share with you in a different video, but just focus here on what we have. So we have this bar is an inside, and then we have the next bar is an outside, and then we have another inside, and then we expect these to go. Like what's happened here also, that we have the failure, so we try to break out in failure, and then we have the failure of the failure, which is very powerful, and then we have the trend, and then that's another one in the US Swiss franc. We have the inside, so look at this bar, that's inside that, and then we have the outside bar, and then we have the inside. And then you'll notice here another thing, and that's the importance of understanding the market structure. Everything here was just inside that one. So although we have this inside, outside, inside, we got some range here which was inside this previous bar. And I insisted to mention this one. I don't want to just show you like perfect textbook examples. I just want to show you real life examples that you're gonna find in the market, and how you combine and put everything together in order to understand it. And now we will move to the outside bar failure. And I know many traders, they talk about the inside bar failure, but they don't talk about the outside bar failure. We have the outside bar failure also. So the outside bar failure happens when the price tries to break out of the outside bar range and then fail by coming back to the bar's range or break out to the other side. And the objective of the failure is taking the other side of the outside bar. So if we are trying to take one side, coming back to range, now we are looking to take the other side of the range. And I'll show you this exactly on the chart right now. At this stage, as I mentioned before, we will come to the signals and how to define the trades and the executions and everything, but all you need to know that there are three main types of the outside bar failure. And if you notice here, you have, this is the first outside bar we have, and then we got this. So what happened here, we tried to break out, and then we got back again to the range. The power of this one also is that it is a pin bar, so it's very powerful. And then you can notice what happened. As I mentioned, the objective is to take the low or the other side of the pattern. So we took the other side of the outside bar, so we took it here, then we came back to the range. That's another one here, and you notice that's an outside, and then that's the outside of the outside. That's another failure. So you got the first failure as an outside, so the sellers managed to break and close below the low, and then the buyers again came back and stepped in, but they didn't manage to close above, and then we went through the range. So that's another failure. This third thing, the third types of failure gonna be, you got that's the outside bar, we took the highs and lows, and then what happened here, you went inside, and then we got the failure of the inside bar, and then we closed up. So it failed first, and then we got the failure of the failure, and then we went up. So just a quick recap for what we have learned today, that we discussed the outside bar definition, and also we discussed the different types of the outside bar. I discussed the outside bar meaning, and we mentioned that one side took the highs and the other side took the lows. So we are talking about very aggressive buyers and sellers here. And also we mentioned the engulfing bar and three pro tips of the outside bar, which were the market structure and understanding the relationship between the outside bar and the previous bar. And also we mentioned the inside outside inside pattern and the failure of the outside bar. So we will have the assignment now, and I just would like to thank everyone who sent me the assignment. I received many emails, I received many Facebook messages from people like they took the assignment last time. It's very like I'm really excited to see people like just interacting with me like that. So this time we will discuss about the outside bar. It's gonna be exactly the same thing. Choose 5 different markets or time frames, find 5 different types of the outside bar, and find an inside outside inside pattern. And also I'd like you to comment below now and tell me, do you prefer to trade the outside bar or the outside bar failure? And if you'd like to connect with me, you can connect with me on my personal Facebook, which is 𝗂𝘂𝘁𝗀𝗏, and you can find our Facebook page at Trading Roadmap. Also, our Twitter handle is Trading Roadmap, and you can send me an email at any time at Khaled@tradingroadmap.com. Thank you for watching, and I'll see you in the next video.